start the next session, we kindly invite you to take your seat. Thank you very much.
Good afternoon, ladies and gentlemen. My name is Giacomo Luciani. I am the scientific director of the Master in International Energy at Sciences Po in Paris. And I have this morning, or this afternoon now, the great honor of moderating this session, which is devoted to the decarbonization of the wider Mediterranean and of the oil exporting countries, with the participation of Claudio Descalzi, who is the CEO of ENI, and Mr. Barchindo, who is the Secretary General of OPEC. So it is a small panel, if you wish, but extremely high caliber. And it's a great occasion for me to be moderating this. Without further delay, because the session is expected to be rather short, I would start asking the question, the key question: do you believe, Mr. Descalzi, we begin with you, do you believe that it is possible to decarbonize the economies of the oil and gas exporting countries? And how should this be solved?
No, everything is possible, clearly, if you have the right technologies and you have the money to do that, and if you have the need. I think that worldwide we have the need to decarbonize our energy sector. Clearly, I think that we have to start from the big countries that with the larger portion of emission. So when we consider Africa, without talking about the North Africa, but Africa in general, that is the biggest continent in the world, and they have a potential solar and wind, solar energy especially, and oil and gas more than the US, for example. But they produce just the 3% of the total CO2 equivalent emissions. So I think that we have to face this issue of decarbonization, starting from the richest country, that's with a larger portion of emissions. So the OECD countries represent, considering also China, about 65–70% of the worldwide emissions. So we have to focus on that, and we have to help using the right technology and the right kind of investment to help to decarbonize, to change the energy mix more than decarbonize, because there is no big emission over there. And we are working in this sense with the countries. We are in 15 countries in Africa, and we are the major company in North Africa, in Algeria, in Libya, in Egypt. We are working with them in this sense.
Mr. Barchindo, some of the OPEC countries position themselves as being leaders in decarbonization. For example, some of the Gulf countries are proposing to invest very large sums in reducing the carbon content of their oil and gas and in capturing the CO2 which is emitted in their economies. Do you see this as being sufficient or potentially extended to all the members of OPEC?
Thank you very much. First of all, I would like to thank the organizers and in particular my friend Claudio for extending this invitation to participate even virtually from Vienna due to the lockdown conditions under which we are operating currently. But it's a great honor to be with you in this very important panel and discussing this very topical issue that Claudio and I had also touched upon when we last met in Abu Dhabi during the ADIPEC. First things first, it's important for our audience to understand that we in OPEC, we are fully supportive of the UN Framework Convention on Climate Change. We have been participants from the inception of these negotiations. As a matter of fact, all our member countries have signed the Paris Agreement. Almost all have ratified the Paris Agreement. We are part and parcel of the global climate pact that were entered into in Glasgow recently. As Claudio just said correctly, although Africa, for example, where we have 7 of our member countries, contribute probably around 3% of global emissions, we are being asked to take upon commitments that are beyond the capacity.
Yes. Is there a problem with the connection?
So maybe it's better to...
Okay.
But we are also being asked to take upon commitments that are beyond our capacity. Our members, I must assure you, are doing everything possible in accordance with the principle of common but differentiated responsibilities and respective capacities of countries to cater for their populations in protecting them from the impact of climate change. But to be able to join the rest of the world in a collective manner, we need technology, we need financing, we need capacity building, and all these are enshrined in the Paris Agreement. But unfortunately, the parties that have the commitment and obligations to provide us with this are lagging behind. And this conversation is very important to draw the attention of the world that we must have a global solutions to this global challenge.
Correct.
Thank you. All scenarios that we have about the future envisage a continuing role for oil and gas, at least for several decades from now. And even the most advanced and hopeful scenario published by the International Energy Agency, the net zero scenario, envisages continuing use of oil and gas by 2050. And the alternative scenario, which is based on what governments are actually doing and promising to do, in reality envisages even higher continuing consumption. So the oil companies are being discouraged from investing in upstream oil and gas. We frequently hear that you should stop investing altogether in oil and gas. And this is creating a situation of real insufficient investment. How do you think this may be addressed, and what might be the consequences of systematic underinvestment in upstream oil and gas?
No, I think that we can see the consequences of this kind of situation without saying that is because the investors or policymakers ask us to stop, but for other reasons. Oil price dropped, gas price dropped in the last 8 years, and also the COVID, so the demand dropped. So what is the situation now? That as soon as the demand restarts, it restarts with the same kind of products, oil, gas, and coal. Coal is still the major contributor in the electricity market. And we don't have supply. The gas price is 6 times more in Europe, 5 times more in Far East, and 2 times more in North America, because the lack of investment. And we see that we struggle now. A lot of fertilizer companies in the UK shut down, and a lot of middle and small industry in Europe and worldwide are suffering because the gas price is too high. So that is a consequence to stop completely. So I think, you know, we have to build the future, and I believe I'm a believer in a different kind of energy environment and energy mix. And we need really to have a very low carbon, a zero carbon emission as soon as possible, clearly also before 2050. But you have to, you know, if you want to work for the future, but you are not in the future, you have to handle your past. And the past is not a past of 5, 6 years, a past of 2 centuries that we built up on infrastructure, industrial processes, on coal first, then on oil and gas. So we cannot delete, like in a screen on a computer, this kind of past. We cannot. That's why we delete ourselves. We have to decarbonize our past. So when we talk about decarbonization, we mean also to capture the CO2, because we have to give the time to all our industry, our people, our society, to decarbonize in terms of habits and in terms of kind of products. So what is existing, we have to capture the CO2. You have to store the CO2. There are many projects in North Sea, they are existing in the US. We participate in the North Sea. We won a tender, and the UK government is financing all the projects in the southwest, and we have also in the southeast the same kind of project. We have in Italy a big capacity. So we have to try to decarbonize, and meanwhile we have to promote new industrial products. We do in Europe, we have to do in the OECD countries, but as Dr. Barkindo said, in Africa, like in Middle East, we have a huge amount of different projects. So we started renewable in Africa, for example, in the 90s, you can imagine, in the sub-Saharan. But we have big project in Algeria and Egypt and in Tunisia, especially Algeria and Tunisia, because we started some years ago, 7 years ago, 8 years ago, replacing the gas consumption that we use for our internal energy production with renewables during the day. There is a very huge coverage there. So we can go free up a lot of gas for the domestic market or for the export for the country. And we signed recently a project of green hydrogen in Egypt and in Algeria. And a project to capture, because they have a lot of depleted reservoirs, but they have fertilizer, they have petrochemicals. And with this depleted reservoir, with all the existing infrastructure, we had to capture the CO2 at the chimneys and then transport and storage. So I think that the sensitivity or really the focus that the producing country have, I'm talking about Africa, North Africa, but clearly in Saudi Arabia or in Abu Dhabi, in Qatar, so they have technology, but they have also the capital So the national company, they can invest. They have investor capital. In North Africa, it's more difficult. So as a private company that worked there for 70 years, I feel we feel the responsibility to invest and give these technologies to change, as I said before, the energy mix.
Mr. Berkindo, if the international oil companies are discouraged from investing in upstream oil and gas, you know, the burden will fall on the shoulders of the national oil companies. And as Dr. Descalzi just said, some of the national oil companies are sufficiently strong from a financial point of view that they can invest, but not all. How do you see this situation evolving, and what consequences might it have for OPEC?
I think it's important to contextualize your very important question. First of all, the challenge before the industry and the world today is to contain and reduce the greenhouse gas emissions. That's number one. Number two, for our industry, capital investments and the provision of appropriate and timely technology are indispensable in our efforts to decarbonize not only the industry, but the world. And as I said earlier, corroborated by Claudio, this is a global challenge. The greenhouse gas emissions is a global challenge. The efforts by the world to reduce the emissions, it's a global challenge and needs a global solution. In trying to garner for this global solution, we cannot select who should do what. To expect national oil companies to bear the burden of continuing to invest in this industry, not only for decarbonization, but also for supply security and market stability, I think it's very, very unrealistic. In 2020, we saw that investments contracted by an unprecedented 30% in the upstream of the oil and gas sector, 30%. And before then, in 2015, 2016, for 2 consecutive years, we saw investments contract by 27%, which was also unprecedented. Now, for us to recover from this, from now to 2045, we estimate in OPEC that we would need about 11.8 trillion US dollars from now to 2045 for investments in the upstream, in the midstream and downstream. Now, how on earth can we expect the national oil companies to bear this burden? This global solution requires all stakeholders on board, and the provision of capital, which is the lifeblood of this industry, is also indispensable. But capital in what? To also provide the appropriate technologies. The technologies are there. You have heard from Claudio the great efforts they are making, especially in Africa, in the Middle East and other places. So it is only through these collaborative efforts with all the parties, national oil companies, IOCs, international banks and financial institutions, all working together in order to achieve the objectives of Paris, now taken on board by the Glasgow Climate Pact.
Thank you. I would like to ask now about the point that Dr. Berkindo just raised about market stability and how to encourage the level of investment which is required. Are we looking forward towards continuing higher prices of oil and gas in the future because of difficulty in in mobilizing the investment and resistance on the part of many quarters?
So if we look at the period 2008, 2014, and then we compare with the period, as my friend Dr. Barkindo said, 2015 up to now, we have a reduction of 45% of investments.
Yes.
Is per year, each year. So instead of investing about between 700, 800 billion every year, we are investing 350, 300 and 400. So it's really, I don't think that in the future we will be able to go back to this kind of investments. I think it's impossible because who is investing in the transition? The private sectors.
Yes.
So it's not I know we have COP26, we have policy maker, but then you have to put money. You must have the technology. And now it's not a dilemma, but you have to invest at least 30% or maybe more of your money, your investment, first of all in R&D, new technology, at least that is for us, because we develop our proprietary technologies, because for the future, you cannot buy the technology, because we have just the technology of the present. And then we have to invest in the new deployment of these technologies. And a huge amount of money. We invest 5 billion in these new technologies in the last 6 years. So you cannot consecrate or give the same kind of attention that you gave in the past to the exploration and production. At least we cannot do that. So clearly, I think, depend on the gas is really linked to the season. So it's like the cold season, you need more gas. So I think that by the springtime, you can go back, but not go back to the $2 or $3 per million BTU that you got before 2 years ago, but go back maybe to 10, 15. That is still very high. For oil is maybe a little bit different. Is on the spot market, it's really volatile. And we have to add also the COVID that now with the fourth wave is creating a additional volatility. So from one side, we have to be green, and we want to be that green, and then we have also COVID. So we have different variables that we don't know in the equation, so you can have infinite solutions from a mathematical point of view, but clearly for the oil is a little bit different. So the market is not stable. But behind that, to be pragmatic, the real issues is energy security. Because if you are not able to invest, you still have the demand that is shaped on the past. And we have the supply that is shaping in a different way for the future. There is a gap. And there is no money to satisfy everything. And the private sectors have to invest. And when you have a public company, a listed company, you have every quarter to justify if you are in the market, you're not any protection. There is no regulatory framework that help you to invest and recover on the system, but you have to recover from what you are doing. Every quarter, they ask you good results. So you have to work on the short, but work on the future. That is the private sector. And from the government point of view, they have to look at the future, but they have to also to consider and handle the security, energy security needs for the society in the present. So I think that we must be very pragmatic and realistic and try to consider every kind of possible technology that help us to reduce the CO2 without destroying the past or the present. And we cannot work now in 2030, 2040, 2050. We are here today. Our needs are needs of today. We have to be believers, but we cannot be dreamers.
Yes. Dr. Berkindo, OPEC has been very successful in the past year during the COVID pandemic to stabilizing the oil market. And avoiding a collapse of prices. As we look forward, if there is a situation of rising oil prices, will OPEC be able to contain this rise and make it bearable for the consumers around the world? Or is this just a one-way action imposing a floor but not a ceiling to prices?
If you look back at the existence of OPEC in the last 60 plus years since the organization was founded in Baghdad in September of 1960, the world has witnessed about 7 oil cycles. The latest one is the current one, the COVID-induced cycle. And as you said, in 2020, we saw some unprecedented events in the market as a result of this pandemic. And we rose to the challenge together with our partners in the non-OPEC producing countries to take extraordinary decisions, and jointly implemented these decisions literally to rescue the industry. We saw, if you recall, in April, and Claudio will confirm that, demand crashed by over 20 million barrels, 20 million barrels a day. We had never seen this in history of oil. And we saw prices took a historic slump as a result of that. At one point in New York, we saw WTI for the first time in history selling at negative prices. Now, we don't hope that such a cycle will ever recur. We believe this is just caused by this health pandemic, and we are glad that the world is also doing everything they can to contain this virus once and for all. And we remain optimistic that the worst is over, despite the uncertainties with regards to the new variants, whether Delta or Omicron and what have you. But our framework of cooperation with the non-OPEC producing countries that we call the Declaration of Cooperation that we entered into in December of 2016 continues to be relevant, not only in that cycle, 2015, 2016, and also in this current cycle, when we found out that there was no need to reinvent the wheel. We should continue the application of that framework and continue with our supply adjustments. And we can see that we have been able to survive 2020. And in 2021, our numbers are showing that we will continue this trajectory of recovery. As a matter of fact, we have postulated that GDP will rise by 5.6% in 2021 and 4.2% next year. And in terms of demand for oil, we are already in December. So the estimate at the moment is about 5.7 million barrels a day growth. And in 2022, we expect another 4.2 million. And we are continuing the application of the decisions taken under the framework of Declaration of Cooperation, meeting monthly with the non-OPEC producing countries, continuing to remain focused on the evolution of the market, despite all the uncertainties and the volatility that we continue to see, which are also due to extraneous factors, not necessarily the fundamentals of oil and gas. But we will continue to do what we know best to ensure that we attain stability in the oil market on a sustainable basis.
Thank you very much. Mr. Descalzi, you mentioned that ENI, as all oil companies, needs to invest in various areas. And before we close, I want to ask you about an investment that is perhaps not sufficiently known by the wider public, which is your position in Commonwealth Fusion Systems, which is a company working for fusion, nuclear fusion in the neighborhood of Boston, an offspring of MIT, in which ENI has a significant share. What is your expectation about this investment?
I think that as an energy company, and now we've expired our time, but as an energy company, we have to look at the future. I said that we have to be believers, but in a very pragmatic way. And we started this journey with the MIT about 8 years ago. We work with them from an engineering point of view and supply chain. We define a path with 3 main steps. So the first one was really critical because we had to find the right combination of superconductor that assures the containment of the fusion, so of the plasma. I gave a really, I'm very positive now because the step that we reached in June was really essential. 20 Tesla is the first time that we worldwide that we can reach this kind of value. So that means that it's likely that we can create a reactor with a positive balance in terms of energy. So you need less, you produce more energy that what you use to produce the fusion. Next step is 2025 with a small scale plant that we are going to build in Boston. Now we are, a couple of weeks ago, we tried to gather all the money needed to develop that. In 1 week, we were able to fund about $2 billion. So we are covered now from an investment point of view. So that means that the people believe that we can be succeed. So I'm positive. It's a very short time because 2025 is tomorrow and 2030 for the industrialization is tomorrow. That means that we can have a really revolution in the energy, electricity domain. That means that we can produce energy without big change in the infrastructure. That is the main point. Otherwise, you have to invest too much. And I hope that that could be a very important contribution for humanity.
Mr. Berkindo, how do you see the future of OPEC, especially with respect to innovation and new technologies? For example, the whole movement towards electrification of mobility, of automobiles, and so on and so forth. Are you afraid that technology may undermine OPEC?
To the contrary, we are strong advocates of technology and the application of appropriate technologies in our industry. Historians will tell you that our industry has always been at the forefront of the application of these technologies, and hence the evolution of the industry to what we are now across the value chain, upstream, midstream, downstream. And we continue to advocate for the industry to continue to invest in R&D so that we can continue to be the reliable and dependable suppliers of energy to the consuming world. The world before COVID struck last year was consuming nearly 100 million barrels a day of oil every single day. Now we are on course of returning the level of consumption in 2022 to pre-COVID levels. and the below ground resources of nearly 1.5 trillion proven reserves of oil are there, not only for the current generation, but for future generations. 30 years ago, the United Nations came out with a report that fossil fuels accounted for nearly 81% of the global energy mix. Today, it is almost the same. In our forecast to 2045 or even to the mid-century levels, oil and gas will account for over 50% of the global energy mix. And in all the pronouncements we had from Glasgow, we have not yet seen any concrete roadmap or plans of how to replace these 50% plus of energy sources in the global energy mix without creating unprecedented turmoil in the energy markets. What we saw this year in Europe and parts of the world in terms of coal, electricity crisis is just a sign of what to come if we do not remain realistic and pursue our transition policies in accordance with the science, in accordance with data, away from emotions. Oil and gas would be needed for the foreseeable future. What we in the industry are pontificating is the need to source and apply technology to address the emissions that come from the exploration, extraction, refining, and the use of these beautiful sources of energy.
Thank you very much. We have come to the close of this session, and please join me in thanking our speakers. There is no need for me to draw conclusions. I think we got the message loud and clear. Thank you.